You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, you know what that rocking music means. It's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-interesting, ever-exciting Options Insider Radio Network. I encourage you, if you haven't had a chance to check them out yet, check out all the latest programs on our network, including the Options Playbook Radio and even our new Trading Tech Talk program, where we break down all of the hot happenings in the world of trading technology. If you're interested in Flash Boys, if you've been reading that book, if it has you up in arms about HFT in the marketplace, check out that show. I think you're going to like it. We break down all the various aspects of what's going on behind the scenes in the trading world. And of course, while you're there and while we're talking about tech, make sure you download our mobile app, available in the iOS, Android, and Google Play app stores. You can stream all of your favorite episodes of the Option Block, all 300 plus of them, as well as every other program on our network. You can download them for offline listening, and perhaps best of all, you can just hit that feedback button, that email button, and send us your questions, your comments instantly right through to the hosts of your favorite shows, and we'll answer them right here on the program, like we're going to do today on the Option Block. Check it out, the Options Insider Radio mobile app. I think you're going to like it. All right, and joining me on the old all-star panel today, starting off with the man beaming in from the hinterlands of Chicago. No, not Uncle Mike. He's the other guy beaming in from the hinterlands. Hasn't been on in a while. Good to have him back. None other than the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Swan Wealth Advisors. Mr. Sebastian, welcome back to the program, sir.
Hey, thanks for having me, guys. It's good to be here. Always a pleasure, and looking forward to being around. So, what else is up with you guys? And I would say that there's a big difference between Riverside and St. Charles. All right.
Yes, for our more Chicago astute listeners and Illinois astute listeners, there is a bit of a difference. But
yeah, I could hit Chicago. I could hit Chicago with a baseball. All right.
That's true. Yeah, you can take the L to your house, so that does count.
Yeah.
It's like you live in the Brooklyn equivalent of Manhattan. You know, you're like in a borough out there.
There you go. I like that better.
All right. And also joining us, but he's joining us from the heart of the OX compound here in downtown Chicago, none other than the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Jacobson, welcome back to the program, sir.
Thanks, Mark. Good to be here today. Real mixed day in the market.
Yeah, an interesting one. We're going to get to that all in a little bit because it's time, once again, for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, as the man said, the portion of the show where we break down all of the stuff that's moving the old tape in the marketplace today. As Alex said, it was a bit of a mixed day, not a whole heck of a lot going on from a broad index perspective. But that's not really what's catching everybody's eye here today. Everyone is all hyped up for earnings. It's earnings season. This is what everyone's focusing on these days. All right, so we're going to kick things off with one of the bigger names to report this week. Of course, Apple. They came out on the 23rd and are moving quite a bit into today's activity. Closing today up 43 handles or 8% on the day to 567, nearly 568. Of course, a lot of that interest coming off the sales numbers and, of course, also news of the reverse stock split, of the stock split, which has a lot of people excited to dive back into Apple again as well. This is normally the part of the show where I would toss it to Uncle Mike to dive into all things Apple. He is not on the program as of yet, as you might imagine, a busy day for him over there at RCM. But Mr. Sebastian, I'm sure a lot of your clients over there in the land of the pit are pretty active in Apple. You guys probably watch it pretty aggressively as well. So what was your take on the build-up going into earnings and what we saw coming out of earnings today?
So, you know what was really interesting was that how underpriced the straddle was. It was completely mispriced, mishandled, and was just wrong. So, it was really interesting. They priced out the straddle around $23, and then Apple moved like 40. So this is one of the worst pricings of a straddle since that Google earnings of last year.
Yeah, I was going to say Google is probably the last name that comes to mind that blew it up this bad.
Yeah, but I know there are some saying something bad, but the part I don't get is I get that Apple's going to have a dividend, they're doing a buyback, and it's got a floor. But why run up the stock for them basically admitting we're not going to grow anymore? And so, it's got a nice div yield. It's just a boring Microsoft type stock now. I don't think it's anything to be excited about anymore.
Yeah, that's what I was going to say. This seems like it's kind of entering the Microsoft era. I remember when Microsoft added a dividend, it was a big deal. And that was the end of their kind of high-flying days, and it was a bit of a different mind and tonal shift out there with those stocks. I think maybe we're starting to see some of that with Apple as well. Yet the market eating it up, blowing it $20 past that straddle. So someone out there is loving it. And I've learned over the years not to underestimate the Apple zealots because they will come out in force and run you over if you're not careful. Alex, I'm guessing Apple a big player on the OX sheets today as well.
Yeah, and it was big yesterday, and I'm going to bring the other perspective to it. I think a lot of people thought with both Apple and Facebook that the earnings were going to be ordinary, and as Mark said, Apple was evolving to the kind of Microsoft, it'll grow, it's okay, but it's lost the spark model, and the straddle's never underpriced or overpriced. The straddle represents everybody trading, and it isn't just the market makers pricing it because there's so much paper in Apple. I mean, last couple of days we did almost as much Apple as we did spiders, and that's a big number. I mean, that's a big number, and the move today just indicates that people were too complacent. And the straddle made money, the weeklies made money. We saw lots of ratios, lots of flies, but I will tell you in the last few days, the paper coming through here in Facebook, Apple, and especially Amazon, which I'm sure we'll talk about in a little bit, has had a clear bullish bias because normally in this shop, the bias is pretty balanced. But the bias has been to the upside, and folks were right. And in Amazon today all day, now Amazon had a big move going into earnings. And of course, probably as soon as I finish talking, earnings will come out, they'll be awful. And I'll be wrong, but Apple had a, $10 move today on the, we're going to deliver our own stuff. And the paper has been clearly bullish. And Amazon, up until a month ago when they started to whack the momentum stocks. Amazon was clearing away the outright leader. It had come back a lot when they whacked momentum, as much of the momentum did. But today it was out front ahead of the market, say up 10. And interesting to see what happens when it goes into earnings in a few minutes.
Yes, we are all waiting with bated breath to see what Amazon, the other big A player in the tech scene, announces. But before we depart from Apple, we are now joined by he of that rosy-tinted Apple glow, none other than Uncle Mike Tosaw himself, fresh from counting all of his Apple windfall. Uncle Mike, give us the breakdown of your day that was from an Apple earnings perspective.
I have to say, this is the most disappointing Apple earnings strategy post-earnings Apple block that I'm ever going to deliver, unfortunately. I hate to do this, but going into
you just
earnings,
long stock again? Is that all you were doing?
All I had was a protective put against it. I looked for straddles and strangles, and I looked and looked and looked, and I couldn't find anything that really made sense to where I was. What we have right now in Apple, we're long stock, and the longer term put that we have is a July 490 put. And so Apple got down going into yesterday, it was at 524. And so typically our put is lower than that. So usually we'll have some type of a back spread or something along those lines to do it. But what we've been doing is we've just been selling these short put spreads the last few months. And all I did for it is I went the simple route. I just didn't sell a put spread going into earnings. And so obviously it worked out due to the price, but this the announcement that they actually had, or that there's a lot of things to digest with the earnings, with the 7-for-1 split that they have going. This is the fourth time that they've had a split in company history since it's gone public. And combine that with share buyback, with the dividend increase, this is going to be an interesting stock. If they do have some new idea of some sort, and rumor has it they're going to be, they might be doing something with Nike on some type of an iWatch fitness watch type thing. Who knows? But if they come out with another ingenious product, then this is going to be a fun stock over the course of the next couple of years. So yesterday was an exciting day, to say the least.
Well, what ingenious product are they going to come out with?
I don't know.
Nothing. All right.
So think about this. In our lifetimes, there will always be an Apple story.
Yes.
There will always be they're going to bottle nuclear energy. They're going to change the television. At least in the foreseen future, there will always be an Apple story, and that's their brand. And funny thing, ironically, here at Schwab, Options Express Schwab, they retired all of our Android phones this week and moved us all to iPhones. So there's always going to be an Apple story. There will always be a new phone, a new pad, you haven't seen it yet in the works. And at some point, the marketplace may grow bored of that. But what we saw this last time, my son is a computer scientist and a tech enthusiast. And he was sitting in his room last night, and I said, we had Apple and Facebook earnings yesterday, and no one expected them to be good, including myself. And I expected it would be quiet and earnings would be a disappointment, and both companies blew out. Facebook beat by 160%. I think the consensus was 24 cents, and they came in at 35. So we're still going to see surprises.
Yeah, I mean, I get that. It's just I think the point that you really make is that people are going to get tired. Yeah, I mean, how, the iPhone 4 and the iPhone 5 and the iPhone 6, they've stopped really being that new and different from all the other phones out there. And, the iPad is starting to kind of become commoditized. What I think is going to happen with Apple over the long term is really similar to what happened to Apple in the transition from kind of 1983, 84 toward 1990 when, it was just a computer. Right? Just like, it's just a phone. This is kind of maybe a little bit off slightly, but, think about what happened with Best Buy and flat screen TVs. Remember when flat screen TVs were, $2,500 a pop and new and different, were high margin. I think we're kind of seeing phones start to take the same trajectory as the flat screen televisions. My wife bought me a really nice, huge flat screen TV for Christmas that was cheaper than the one that is, half the size that I bought in 2007. So, I think, when people point out things like margin and all the great things about Apple, those things are going to get compressed over time. And, I'm a big proponent of dividends. I personally, I don't know, this is kind of getting in the weeds, but how do you guys feel about stock buybacks? I personally don't like them at all. I think dividends, while less efficient, because of tax, are a better way of delivering capital back to investors, because it really allows them to decide what to do and better diversifies the investor.
So the first rule of investing is clientele theory, and companies pay dividends because they perceive their shareholders want dividends, right?
Mm-hmm.
Companies that don't pay dividends are viewed as capital appreciation companies, sometimes growth companies. So to your point, does Apple perceive themselves as no longer a growth company? Well, Apple's the exception because there's so much cash that they got plenty of money to grow. Look at General Electric this morning, did a $13 billion acquisition. The fact that they can pay for that stuff in cash, I think there's a new normal here. And look, 1995, you could have bought Apple for $10 a share. 100 shares of Apple bought in 95 is 1,200 shares today. It's going to be 8,400 shares post-split. They made you rich. Same thing.
I agree. And I was at this conference, Alex, and it was interesting. And they were talking about dividend models, and the guy I was listening to made a really strong case that if you're looking for dividend growth and you're really looking for consistent long-term dividends, the space to be in is going to move away from energy and into technology as that sector really matures.
It's certainly an argument, but he's crystal balling the future, and look at the standouts. Look at Amazon up $10 today. Why? Because the story was they're going to whack UPS, and that's disrupting the space, and that's the innovation. Think about the fact that Schwab, which is a very conservative company, pitched the Android and went to the iPhone today. And you say to yourself, well, the one space Apple hasn't had enormous strength in is the enterprise space. And the enterprise space is finally adopting Apple. It wasn't that long ago that if you were a laptop user, you classified Apple as dead on arrival. And in hindsight, you were wrong. So at least in the near term, Apple's always going to be one product cycle away from a magical mystery product. And to your point, Mark, at some point that may not be the case.
Speaking of tech names and dividends, of course, Microsoft got that ball rolling back in the late 90s, I believe it was now, and they are reporting after the bell. Looks like the number is out. They closed today $39.86, just shy of $40, and they were pricing in about $1.60 into that straddle, roughly 4% or so. And it looks like so far, at least in the after hours, we're not exactly seeing a whole heck of a lot, up about 70 odd cents. So roughly half of what they were pricing in. Microsoft traditionally had been a big underperformer from an options premium perspective. Last few cycles, they kind of flipped that script. They were one of the better premium buys coming out of earnings. They were blowing through everything, particularly with the news of Nokia and all the other deals, the CEO shift. They actually had some vol on display. It seems like maybe people were getting a little bit ahead of themselves with this cycle, at least so far, that they were pricing in a little bit more vol than we're seeing right now. Mark, you got your clients out there looking at Microsoft?
Well, I think it's an interesting name. I mean, it's, they're trying to flip the story away from boring to not boring, and they got the new CEO and yada, yada, yada. So, I mean, it's the third or fourth largest company in the world, so everybody watches it. It's going to be interesting to see kind of what happens to NASDAQ volatility over the next couple of weeks. But no, I mean, nobody, we weren't particularly doing anything there. And, but, it's interesting. The one piece I would say is the way they took down NASDAQ into this earnings season, meets and beats are getting treated much better and with less of a meet or beat needed for an underlying rally than in some of the years past because valuation had been taken down so much.
Speaking of meets and beats, I think we finally have Amazon out here as well, and they closed today $337.15. Like Alex said, they already had a bit of a rally today, up 4% today, closing up about 12 and a half handles, and they were pricing in looks like about a 6%, 6.5% move here, $22 roughly straddle going into the close, and looks like they're up about $6 or so far in the after hours. Again, this could be the first blush of the number. You have to wait to see it unfold a little bit, but so far, at least, they seem to be wildly underperforming from a pure volatility, pure premium perspective. But again, this is just first blush. We still have to wait to see how this shakes up. And again, they could have actually experienced a lot of their move in the actual trading day today, in which case that could have muted some of the upside move that we're seeing here as well. So interesting stuff coming out of Amazon land. Just jumping back to Apple for a second, but it actually touches on all these, Amazon as well. It's a topic you and I have discussed a few times on the show recently, Alex, and that is, of course, the minis. The minis were designed pretty much to be an Apple product. They were pretty much pitched initially as mini Apple options back when that stock was trading $700. It seemed like a no-brainer. Of course, they've launched. We've talked many times here on this network and on this show about how they haven't really lived up to expectations. They did some volume today, but I don't think anyone really looked at it and said, wow, they're really letting up the tape. Interesting thing about this, particularly the Apple news coming out of earnings, is, of course, the stock split. A lot of people are saying now, and we discussed this actually earlier on one of our other programs today, about how maybe this could be actually the kiss of death for the minis. Apple going 7-for-1 stock split, that obviates what little need there was for a lot of these mini contracts. Alex, what's your take here on A, what kind of volume you saw in the minis going into Apple and Amazon and others, and then B, the results of what we're seeing now with this shakeup of the stock split in Apple, that might actually finally put the nail in the coffin here on the mini options?
Yeah, so it's a glass half full, glass half empty. The minis traded probably the best volume we've seen since their introduction, but still not enough. And I agree with you, the 7-to-1 may be the death knell for the minis.
Well, did anybody ever step up and actually reduce the commission on the minis?
To my knowledge, no.
Well, then there you have it. I mean, I think that if you want to know what killed it was that probably something along those lines is that they were a horribly inefficient product. Yes, they fit with a certain client's risk profile, but the 10-to-1 commission made them pretty hard, probably hard to swallow for your average user of minis.
That makes it difficult because the people that are going to be trading a mini typically would be commission sensitive. So I agree.
It's that way all the time. The people that actually need the break are the ones that have the hardest time getting the break. I see that over and over and over again. It's always interesting. We run at Swan, separately managed accounts, and people always look at us shocked when I tell them, yeah, we'll take a small qualified account, or we have accounts that aren't 7 and 8 digit figures, and people are always like, really? I'm like, yeah, we like taking care of anybody that we can, and I wish, and I know OX and RCM kind of feel the same way, but I wish there were more people in the industry that took that approach, because it's funny, the little guy needs the most help, and there's the least help out there to get him.
Now, speaking of the help, I'm just looking at some of the Apple minis right now while we're talking. And you're right, Alex. They did some numbers today, which is decent. You see a couple hundred lots going up on different strikes here in May. Looks like 500 contracts on one strike. So that's a decent amount. And, of course, this is the one day, if they are going to trade, it's going to be today. This is the day they were designed for. And yet, I'm still looking at some of the spreads. In addition to the commissions, these spreads are still atrocious in these products. You really have to want these things, not only to suck down the commissions, but you're talking $2 plus spreads still on some of these minis, and that's after they've come in over the past year. They were even wider So we're still not seeing any help on the liquidity providing front to really make these things viable. So it's kind of a multifaceted stumble, it seems like, Mark, where you have the brokerage firms still charging full freight and full ticket charge for a 1/10 size product, on top of the fact that liquidity providers, for probably a variety of reasons, aren't really incentivized to jump in there and make tight markets on these things. So it's really, so far, it seems like everybody is dropping the ball collectively on these things.
Yeah, you're right.
Yeah, it's a massive catch-22, and everybody says, if there's more volume, we tighten spreads. If there's more volume, we drop commissions. I mean, here at OX, we don't charge you to call a desk. If somebody called a desk and said, I want to do minis and I want a better rate, they would have got it. But a lot of people don't reach out. They just look at the screen and say, it just doesn't make sense, or I'm going to trade the big ones. I traded the minis at the beginning, and for the first few days, you had decent markets, and I pay a little less than full boat commissions, but there are a lot of clients that have a similar deal, and most brokerage houses will, if you demonstrate the ability to do some business, or in many cases bring enough assets in, then the commission schedule becomes flexible. And the incentives in the industry right now with free trades and cash and stuff like that, I mean, the industry is still competing fairly aggressively for business. But if overall friction is too high, and overall friction is commissions, bid offer, and slippage, and one thing I experienced in the minis, especially at the beginning, is if you did get filled somewhere near the midpoint, you saw the markets go away and you had immediate slippage. So it was a combination of things. But 7-1 on Apple will kill the mini. The mini may have been dead anyway because you saw no new ones listed. So you needed a number of constituencies. You needed the liquidity providers, you needed the customers, you needed the firms. We used to joke, we used to say that if you get 2 out of 3, you win. You had none out of 3, and 7-1 will probably be the death now.
Yeah, I'll be heading down to the OIC conference next week. I'll be sure to put that question to all the various exchange and brokerage heads that I talked to as well about the minis. But I tend to fall into your camp, Alex. I think this is the beginning of the end. You're right. The fact that we haven't seen any new classes listed to that same 5 for the past year plus is also not a good sign that there's a lot of interest in these things going forward. Speaking of going forward, we have to keep on rolling with the show right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that funky tune means it's time to parse the funkier paper we're seeing going up in the old options market today. A lot of that stuff going up. We're going to kick things off with, I believe, a newcomer to the Odd Block. If it's not, we haven't talked about them in quite a while. This is EROC, Eagle Rock Energy Partners LP, closing today about $4 even on the day, down a whopping 17% or 82 cents. Not exactly the best day for EROC here. Of course, they haven't even had earnings yet. Earnings are coming out on the 30th. Nevertheless, they had a pretty banner day today from an options volume perspective. They usually do about 400 contracts a day, doing nearly 13,000 today. And pretty much the bulk of that, about 9,000 contracts or so, going up in one pretty sizable strangle out here. We saw people loading up on the July 2.5 puts. We profiled it at around 3,000 had gone up. By the end of the day, a total of 5,000 had gone up on that strike on open interest of just 18 contracts. So all opening paper, primarily buys, lifting offers out here on prices ranging from about 15 to 25 cents. The same goes for the calls. They did about 4,000 of those on similar price ranges, about 15 to 25 cents on those. So the strangle went up anywhere from 30 to 50 cents, depending on where they legged into it. A lot of small blocks lifting offers on both sides of the fence here. Only about 2,000 contracts open on the July 5s as well. So this is opening paper on the call side as well. And looking at the chart here, this is an interesting play. Of course, the name got beaten up a little bit today, so they did exhibit some volatility. This could be someone coming in and guessing that more vol to come here, more movement to come here in good old EROC. They have been kind of vacillating around this 5 handle until we got here to today. So, of course, the paucity of strikes out here doesn't really give you many options, pun intended. You pretty much load up on the 2.5 puts and the 5 calls, and that's kind of about it. A day like today would scream for a few more strike selection options. Maybe they'll add those in the wake of these movements. But nonetheless, someone here thinking in the near term we're going to get a lot more bang for our buck coming out of EROC. Mark, I'm sure this is probably one of your first names you check every morning when you wake up.
Yeah, no, I've been trading EROC for 10, 15 years as a market maker. And it's it's probably my favorite option to trade. There's your Apples that are fun to trade. There's your Microsofts, and then there's your EROCs. And we all know that EROC is the top of the rock, if you will. This is a classic Longo special, in my opinion. And no, not one I've watched very often.
Not enough size for me, though. It's got to be at least 10,000.
Fair enough. Not like old RDN.
The millions from RDN. They're still trickling in every now and then. All right, next up we have SandRidge Energy Inc., ticker symbol SD. They closed today about almost $7, down a couple cents here on the day. This is the name that does, actually from an odd block perspective, fairly decent volume, about 16,000 contracts a day, doing 50,000 today. And just some size paper going up out here. The bulk of this seemed to be coming here in the May 7 strike. We highlighted it earlier in the day here when we saw a 2,000 lot going up, but we saw more large blocks piling in after that to the point of total of 33,000, nearly 34,000 going up on this strike. This appears to be, given the open interest is about 36,000 contracts, this appears to be someone who came in, was overriding this stock ahead of earnings, now starting to say, hey, let's take this off going into earnings. Earnings are indeed on the 7th, so they're coming up. This guy either happy with what he got or afraid he's going to get run over here. Either way, taking the call portion off, probably still along the underlying and just saying, hey, I'll take the shirt off, let this ride here. That's your take as well, Senor Sebastian?
That's your guess is probably the right guess, in my opinion.
That's always the case, isn't it there, sir?
Isn't it? It is indeed.
You've been on the show long enough to know that by now.
Oh, for sure. For sure.
All right, next up, we have a frequent player in the odd block, at least of late. This is the iShares Japan ETF, ticker symbol EWJ, closing today about $11 and some change. This is the name that does about 32,000 contracts a day, doing nearly 60,000 today. And what we saw again out here in EWJ, looked like we had some closing paper. In particular was rolling out to June here, the June 11s. We just saw pretty much all of that paper I just said went up in this one trade on the June 11 strike. To be precise, when we highlighted it, we saw 46,000 plus of the June 11s going up, being purchased for about 33 cents. Total on the day of 55,000. This is against open interest of 250,000, actually a little more than that on this strike. So there is a ton of paper here on this June 11 strike. Looks like someone just closing up a bunch of it. This went up in a couple large blocks here. Again, this looks probably like some short covering here at these levels. EWJ's had a bit of a rough go lately, taking some of this off the table on the 11 strike while we're still down on the lower portions of this chart. Maybe he'll roll again up to a higher level down the road. You guys watch the Japan fund at all over there in the land of the pit, Senor Sebastian?
Well, I mean, I think everybody should be watching the pit. This is an index that actually does matter. I think there's something going on with Abe this weekend or something along those lines. That could also be what's driving stuff. This has been an active one for a long time. It's an interesting stock, or ETF, if you will. And the difference one is this is actually a play on both the currency and the underlying. It's not the dollar adjusted. So this one can move extremely volatile at times.
And if this name sounds familiar to your listeners, we talked about it on the website back again on April 9th, a few weeks back, when we highlighted some rolls out here in the calls. Looks like someone now coming in and just outright closing those calls as well. Who knows? Maybe we'll see some more roll downs or rolls to other strikes, because there is still a ton of paper left open on that strike. All right, moving on to our final name here in the odd block. This is ABC. No, it's not the electric company. It's AmerisourceBergen Corp. And they closed today $64.89. This is the name that does, about 400 contracts a day, doing 6,000 today. And the bulk of this paper coming in on the put side of the fence, flipping the skew here a little bit, going over to the puts. The May 65 puts, to be precise. We saw when we wrote it up on the site, it was 3,000. They did a total of 4,000 on the day here. These puts going up, lifting offers primarily for prices around $1.05. Was a decent play because these puts went out actually $1.30 at $1.45, even though the stock closed up slightly. So this guy clearly bidding up the vol here. Even though he's winning, he still hasn't closed them out. Yeah, interesting paper going up here. Size put buys, again, looking at the chart here of ABC, it's vacillated at a higher region, so to have someone coming in now and loading up here on the downside, or I should say the at the money side right here, is kind of interesting, perhaps specking that the downward trend is going to continue out here. We didn't see any sign that this was done with stock, so it looks like this guy's just opening on this strike. Only 500 open right now on the May 65 puts. Senior Sebastian, take us home here with the AmerisourceBergen Corp May 65 puts. What you take?
Well, if it's a trade by appointment stock and a guy has a serious axe to grind and he's been right, it's typically not smart to argue with the guy. That's the one thing I really know.
But now that's all the time we have for the odd block on this program, and now it's time to keep on rolling right on into Alex's favorite segment, because it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, welcome to the Xpress Block. This is, of course, the portion of the show where all of us, particularly Alex, don our fanciest of headgear and proceed to head on behind the velvet ropes into the land, the inner sanctum, known as Options Express by Charles Schwab. Alex, you guys had a lot of activity going on this week. Obviously, a big week for your clientele, a lot of earnings coming out. We touched on a little bit earlier in the week, touched on a little bit again at the top of the show, but I'm sure there was a lot of activity going on leading into Facebook, coming out of Facebook, going into Apple, coming out of Apple, and indeed into Amazon. So I'm sure you had a lot going on over there and a lot to parse today in the old Xpress Block.
Yeah, and I think you just did it all, Mark. But
that's my job, sir.
That's exactly the case. I mean, I can't remember, and I've been in the industry over 40 years. I can't remember how many times the Dow has had a absolute zero number, absolute unchanged in it. But the averages really don't reflect what was going on today. Today was just an incredible amount of unwinding of the Apple and Facebook and the industry, not only OX, but the industry for much of the last couple of years has done an enormous amount of Apple. And then when Apple dropped into the 400s again, it kind of went quiet. It kind of became sort of a living dead issue where there was lots of it in customer accounts, and you were still seeing, as Mike does, a lot of put spread selling, but the out and out spec in the weeklies and customers buying flies around earnings, that had dried up until this time. But this time there was just a ton of bullish paper, and both I think Apple, Facebook, and Twitter now are, other than SPY and SPX, the most active issues, and that's where the excitement has been. Another name that desk pointed out to me today that they were doing some paper in was Under Armour, which is also a name that's kind of fallen off in terms of volume that had come back. But the desk was remarkably busy today. I mean, every time I kind of queried them, they were like, "Not now, we're busy," and that clearly wasn't reflected in the averages today. But the paper here for a few days has been really bullish. And as I mentioned earlier, the paper going into Amazon was bullish. Now, again, maybe that was skewed by the fact that it was up a dozen points during the day today. But a busy day overall. The other thing we've seen is we've seen our traditional premium harvesters coming back in. So now that the markets seem to have held the kind of 1860, 1870 level in the S&P, we're starting to get some of our traditional premium sellers back in. So they seem to be thinking that the broad market a trading range, but very busy day today and not reflected in the averages.
All right. Thank you for that, Alex. And it's Thursday, listeners, so you know what that means. It means it's time for your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Got a lot of great questions coming in, so we're just going to dive right into it, get to as many as we can. Starting off with a question from Nick Snow. He's written in before. He says, "Hey, Mark, second-time writer here, was recently scanning brokers out there and have listened to almost everything on Options Insider." Well, that's a lot of content there, Nick, so I'm glad you have some time on your hands. He goes on to write, "I found one that is highly regarded by barons for price and technology recently. One of their, quote, proprietary scanning functions is meant for spread traders. I opened a virtual account and played with it, and it is all out-of-the-money, low-vol, 2 standard deviation debit spreads. Is this not a complete love your broker trade? Is there something more that they can build in a spread debit trade that I don't know? Sincerely yours, Nick." Well, interesting question, Nick. First off, I don't know exactly the functionality you're talking about. I haven't had a chance to look at it, so I can't say with any specificity exactly what they're doing. Just from your description of it, it is a little bit odd. You don't see too many spread or idea generation tools, and I'm sure Alex can speak to this at length working with the Idea Hub, but you don't see too many idea generation tools that recommend 2 standard deviation out of the money debit spreads. It's not a typical choice. I wouldn't classify it as a love your broker trade. That's kind of the terminology Andrew and I like to throw around in the odd block when we see kind of ridiculous trades that just generate commissions for no reason, like doing 100,000 contracts and rolling 1 strike down. I mean, things that just make no sense. There's a little less of that here. I don't know what kind of size you're doing, but regardless, I wouldn't call it a love your broker trade, but it is a little bit odd to see debit spreads being recommended in these kind of far out of the money type trades. These are typically not things that brokers recommend because they don't work out too well usually. And again, also they like to usually cater to the higher end of the clientele, which tends to like a lot more of that premium harvesting type of recommendation. Alex, you obviously spent a lot of time building idea generation and spread recommendation tools yourself. I'm sure you probably don't know which exact broker he's referring to, but does this tool even make any sense to you? Have you seen things like this out there?
No, I hate to give a sort of a simple answer. I know when we first demoed some of the parts of Hub, which show 1 standard deviation out of the money credit spreads. Now, any credit spread has got a parity debit spread, but I know of no one who has a tool like that. We did have people who said, I don't want to do 1 standard deviation out of the money credit spreads. I want to do 2, but those are credit spreads. I just don't know. It doesn't sound like anything I've ever seen. And if it won a Barron's Award, it means it's going to be one of the well-known names, and I'm just not familiar with it.
Yeah, if they have credit spreads on this, that would make more sense. I've seen those tools. You don't see a lot of people out there pushing debit spreads. It's just not a sexy thing to push. Interesting question, Nick. I wish we could say more about exactly what is going on out there, but I think your tool has stumped pretty much all of us. It's an odd tool. You don't see people recommending that very often, I think for all the reasons we just described. All right, moving on. Question here from George. He writes, "You posted a chart recently on the Options Insider, and unfortunately I do not know what the P/C means. Would you please explain it for me? Many thanks. Your site is very interesting and readable." Thanks, George. Really quickly, it's pretty basic stuff. We do a lot of options activity on the site. We also do a lot of volume and things like that. Whenever you see a chart with something like that, P/C, it typically stands for put/call indicator. That's all it means. So it's not something very complicated, not something very confusing, just very basic stuff. If you see a P over there, that means we're highlighting put activity. If you see a C, it's highlighting call activity. So nothing crazy. Just very, very, very standard basic stuff. We got time for a few more here. It's a question from A. Burger, listener, and he writes, when are the futures options going live in the Idea Hub? Thanks, and I love the show. P.S. Can OX add a caps lock indicator to the website like they have in iTunes? It would make it easier for me to log in since I'm always forgetting about my caps lock key. Well, that's an interesting one. Alex, that's right up your alley, sir.
So I'll answer the second question first. The caps lock, I have already sent that to product development, and they kind of looked at me and
You're
went,
ahead of this guy. I love it. But I think that's a great idea, too. I'm going to put my recommendation in for that as well.
Yeah, because we've all done that, right? This morning when they were setting up my iPhone, I had to give them my my Apple ID, and I had a caps lock on it. It kept throwing me off and said, 3 tries and you're going to have to reset your password. So I've already sent it over to product development. Idea Hub for futures options is in the mix. The development team right now is focused on getting the hub to Schwab Mobile, and then futures come after that. But I'm going to put a little asterisk up. All that stuff is pending regulatory approval, and because futures is a different regulator, there's still a lot of attorneys that are going to have to sign off on that. I will tell you one interesting feature, one tease for when it does come. In futures options, talking about 2 standard deviations out of the money. In futures options, we did a half and a full because that futures customer tends to be more aggressive. So it's a more aggressive tool, which I'm sure will give the legal folks gray hairs so they can get as gray as I am, but it's in the mix to come. I don't have a firm ETA.
Thanks for that, Alex. And I'm going to asterisk this as my question of the week, because I think every broker, every website should have that. That should just be standard issue. If you have to enter a password in, that little indicator should be on, because I've done that more times than I can count. Great question, Mr. Berger there. All right, last up, we have a question here coming in from Doc or Dr. Phil. Hopefully it's not the Dr. Phil. And he writes, why do so many options traders fall to the, quote, dark side? You don't see many short sellers in equities. Is premium selling just more attractive, or is there something else about options traders? Interesting question, Mr. Doc Phil, coming at it from a psychological perspective. I'm not sure you're equating apples to apples there. Short selling in an equity is not the same thing as a premium seller. Premium selling in options is obviously a very high probability strategy. That's why so many people are attracted to it. Selling short an equity is nowhere near the same level of high probability type strategy. So I wouldn't really equate them. I think that's really the reason so many people start coming over to the dark side, as I like to call it, and you like to call it here, is that high probability factor lures them in, and if anything, they kind of get over attracted to it, and they do nothing but right. And as we said on this show many times, they fail to close out their shorts even when they go their way. They fail to do risk mitigated type strategies like put spreads instead of naked outright puts and things like that eventually will come back to bite them and wipe out a large portion of their account. But we've seen this time and again. People come into options, maybe they start off buying, and then they do a right, and then they kind of just proceeds from there. They realize, hey, this is interesting. I'm collecting instead of paying. I like that. My probability is pretty high. I like that. And it kind of just proceeds from there. Hopefully they get to some risk mitigated place, but sometimes it ends in disaster too. So that's why we have a show like this, to keep talking people back from the dark side.
Yeah, I mean, that we do a lot at Swan. We do a lot of premium selling against our long insurance. And the reason why we do that is because insurance is so expensive. And that's really the whole key to the thing is, if you look at where Edge is, and this is kind of the title around my book, right? The one-man insurance company, is that generally speaking, you have to pay to buy insurance. Options are, as Alex has said many a time, options are a form of insurance, and that's why people there are a lot of people that prefer to write policies than there are a lot of people that prefer to write policies than to own policies.
in general, most people look at it as, you're right, it is a higher probability, and most people like to win more than they lose. And obviously, there's no inherent advantage theoretically to buying or selling an option. That's an argument that's gone on since the beginning of option trading. Is it better to be an option buyer or an option seller? We could argue that one for forever. But a lot of times, you're right, a lot of people like to sell premium because the probability is higher and you're getting more wins than losses.
To Mike's point, there's the theoretical and the practical. People have evolved, and many people will come to the options market and buy. And occasionally, as Mike pointed out, the probability of making money off a buy or sell is essentially the same. But you're going to have to do it a million times to get that probability right. The thing about sellers, if you're selling one standard deviation out of the money, you should in fact make money 2/3 of the time. If you're selling two standard deviations out of the money, you should in fact make money, 95% of the time. Now, whether you're making the right amount of money or less, to Mark's point, the insurance premium sometimes can be a little too little, and that's one of the issues with selling. But many of the people who trade in the options market have evolved, and they've learned that on a day-to-day basis, they need to have some premium harvesting strategy, and on an event basis, they need to have some directional strategy.
All right, that's all the time we have for the mail block for this week. Thanks to everybody who wrote in, and now we're going to roll on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. Before we get into what we're watching, let's take a final look here at the earnings coming out after the bell today. Microsoft extending their rally a little bit here in the after hours, up about a little over $1 now. So they were only up about 70 cents before. Still not making the full $1.60 or so they went out at on the straddle, but there's a little bit time left. But still seems like they're going to settle out right here around the 41 level, up about $1 and change. And then looking at Amazon, we see they're up about $8 or so in the after hours. Again, another underperformer on the premium buying side. So it looks like, at least right now, Apple is the winner for the premium buyers. It is the blowout name for this quarter. We'll see if anyone else can come in to challenge that. There are some names coming out later into next week. We have, of course, Marriott on the 29th. Nokia, subdivision, I suppose you can call them, of Microsoft now, also on the 29th. Another big name a lot of you guys like to watch, Twitter, also coming out on the 29th. And LinkedIn on the 1st, as well as a name that hits closer to home for us, CME, also coming out on the 1st. Uncle Mike, what else are you watching for the rest of this week going into the weekend?
You pretty much hit everything. Getting geared up for the non-farm announcements coming up, but that's not till another couple episodes. But that's pretty much it for now.
I was going to say, wait a minute, did I miss a non-farm? But that's not for a little while.
Yeah, that non-farm and Apple earnings, they always come out on the same day.
Same exact day. I forgot that old saw. All right, Mr. Sebastian, what are you watching for the rest of this week?
I'm watching that NASDAQ VIX spread start to tighten back up, and I'm keeping my eye on the Russell 2000. I'm really interested to see how that ends up lining up with the overall, with whether the rut vol normalizes or whether there's some sort of something wrong with the U.S. So that's what I'm going to be watching for.
Alex, take us home. What are you watching for the rest of this week, sir, into the weekend?
The Ukraine has become uninteresting, even though they're actually killing people now. So that hasn't seemed to impact market volatility. Kind of surprised about that. The president is in Asia, and that doesn't seem to be generating lots of headlines. So got to go back to the core macro issues. Looking at the 10-year, looking at volatility, I'm still a firm believer that this is a bull market, barring geopolitical events. I think VIX is going to take out 13, trade into the 12s, 11s, and that's what we're looking at here.
Hey, Obama's dancing with Japanese robots. If that doesn't move the market, then nothing will, sir. All right, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, I want to check in really quickly with each of my cohorts one more time to see what they have cooking that may interest you, the listener. Uncle Mike, we'll start with you. What is coming down the pike on the old RCM webinar choo-choo?
Well, this past Tuesday, we had a great webinar on the Iron Butterfly versus the Iron Condor. And this coming Tuesday, we are going to go over adjustments to the Iron Butterfly when things don't always go your way. For more info, go to RCM, www.rcmwealthadvisors.com/webinar.
Riding that Iron Butterfly train. One of my favorite trains to get on, sir. Good stuff. All right. Speaking of webinars and online courses and all that fun stuff, Mr. Sebastian, what do you have cooking up over there in the land of the pit?
Well, we got a couple things going on at Swan Wealth Advisors. We're still working on Swan Re. We're going to put out our quarterly newsletter here shortly, Good, Bad, and the Ugly. So that should be kind of interesting for all of my advisor friends. And then at Option Pit, expect a chat room to be launched here in the next couple of weeks. And our electronic gold course that we've developed is getting rave reviews from users. So if you have any interest in learning how to trade options, then that might be worth checking out. One thing we're actually thinking about implementing, and I'd love some feedback from our listeners, is some sort of investing with options course. We think there might be some demand for that. If you guys agree, let us know.
Interesting stuff. If you like that idea, listeners, hit them up over there at optionpit.com. Let them know. And last but certainly not least, Mr. Viceroy, where is your hat taking us this week from an educational webinar perspective?
So the live event this Saturday in Schaumburg at the Marriott Convention Center, Jimmy Ruzan, former CBOE market maker, will do his 9 to 3 live in person. Head out to the Marriott if you want to participate. If you want to be in the presentation but don't want to head all the way out to Schaumburg, we simulcast it on the site, optionsexpress.com, and you get full participation. You can ask questions just as if you were there, but you don't get the great in-person of spending time with Jimmy. The next in-person event, May 10th in New York City, Midtown. And then a couple webinars. Monday, the 28th, Nina's going to do advanced order entry and showcase the walk limit. And again, walk limit continues to be an exclusive product here, and people who have used it can't seem to live without it now. That's one of those things that once you try it, it becomes addictive. Tuesday, 4/29, Forex with Jeremy Wagner. Forex is a new product here at OX. We were in that business a couple of years ago, and then we froze it for a little bit, but back active in Forex. It's part of the universal account. If you're someone who's interested in trading Forex pairs, Tuesday the 29th, Forex.
All right. Thank you for that, Alex. That is going to do it for this episode of the Option Block. And of course, all of us here on the All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for writing in with such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.